Good afternoon. George Cavaligos for HFT Bonds and Notes. Whoa, don't do that. I don't know how long I've been looking for a move down to 130.18 to 22 in the 10-year and 142.03 to 05 in the bonds. A couple weeks at least. We got those moves again overnight. You know, when I went to bed last night, the low in the 10-year was 130.25. And I think the low in the bonds was like 142.10-ish. Figured, okay, you know, come in tomorrow. Guys in the States will see that. They'll sell it again. We'll go down, either retest that low or make the lower low and go look for that 130.18 area. Look for the 142.03. Should be a pretty easy trade. Go to bed. Wake up this morning and the 10-year was trading 130.30. By the time I got to the office, it was trading, I think, above 131. I think 131.02. And turned the machines on before I could, you know, whistle Dixie. I think we were trading 131. I don't know, 08, 10, something like that. And we never pulled back. At one point, I looked at a 30-minute chart, and on that 30-minute chart, every candle was green, meaning it was a positive close without a pullback, from the 3:30 a.m. lows Central Time until about noon Chicago time. And we had, I think, two little pullbacks. I think we caught that one, actually, a little bit of it. I tried to sell it initially up around that 09-10 level, figured that was that real big volume level, that 131.09 to 10 level, just the biggest volume we've seen over the last week, I think. And sort of the middle of the sort of range that we've been messing around with. And I traded small because I was a little bit early. I thought we should wait. You know, you guys read the email, hopefully. I thought we should wait for the buyback to finish and for Europe to close, because the problems we saw were, I think, initiated out of Europe. The sell-off in the bonds was initiated out of Japan and China, and then the bounce was initiated out of our friends in Europe. And here we go again with all that stuff again. You know, obviously the sales at 9 didn't work. The market stopped me out. I ended up scratching that trade and basically scratched the whole day today. Which, considering I've been looking at those lows for the last couple weeks as, you know, a major objective, major support level, and not getting long down there. I was watching the football game like everybody else last night, had probably too many beers and didn't leave bids in below the market. I probably should have done that. Now we've got a move up off the lows. It looks like almost perfect five-wave structure. I think I was looking at 131.22 plus as a short-term target on the 10-year. We got up to 22. And on the bonds, I think we're looking at 143.30 as a short-term target, and we got up to 143.28. So I'm assuming probably early tonight we get a little bit of follow-through on the upside here. I'm going to go see what happens if we can put up the half-tick higher high in 10 years against 22. Maybe if we see a failure at that level, we put on a small short. Otherwise, we're going to go and look at the highs from Friday at 131.26 plus. And that's kind of an important level. I'm counting that as a previous fourth wave high of one less degree than the bigger picture. I guess you can call that the micro view. So I think we should test that at some point here. The only question is, do we get a significant pullback first, or do we go higher? Now I'm going to start looking for five-wave structure on the upside. I think we're building five-wave structure on the short-term charts from last night's lows already. We might go a little bit higher tonight, but we're getting late in this first move. What I want to do now is look for the wave 2 pullback. And let's say based on, you know, today's range, that we don't make a higher high above 22. And then we're going to go and look at the fib retracements. And wave 2s are very tough to read, obviously. I think we could see a fairly significant pullback, but we could only go 382, we could go 50%. Lately, all the corrective moves have been 618 retracements. Last night's lows in the bonds and the notes are the big 618 fib retracements of the previous rally that we put up earlier in 2012, from late 2011 through the summer of 2012. we did the 618, the 61% fib retracements at last night's lows. Those are key support areas and very common corrective levels. You guys know I've been labeling ABC down. Yesterday's low or last night's low was the bottom of the C wave, I think. Now we're going to go into some type of a rally here. We don't know if it's corrective or impulsive yet, but I think I'm leaning towards corrective since I think we're in a much bigger, like so far we've done a zigzag, ABC down. That's a single zigzag. It's a very common corrective pattern. I don't think we're going to end any kind of a massive bull market rally of 30 years on a simple zigzag. Double zigzag. Which means ABC down, X wave up, which typically will go ABC up, and then another ABC down, sideways to lower. It's going to be a tough trade for the next year, basically, in treasuries. We're fighting headwinds here. We got the Fed underneath us blowing the wind up our skirts, and we've got the debt deflation aspects, keeping a bid underneath the market, and on the upside, we've got this sort of recovering, sort of healing, unwinding of massive flight to quality trades type things going on too. I don't know if that's the right thing to do, but that's what's happening. So there's where we're at. Here's what I think is happening. Let's go back to the short-term structure. A wave 2 pullback. What I'm looking for is a retracement of this rally to some of these fib retracements, okay? Here, I'm going to read you the fib retracements on the 10-year off of the rally. It's simple. I took today's high at 22.5, last night's lows at 130.23, and I ran the fib retracements. 38% retracement, 131.10 plus. 50%, 131.07. 618, 131.03. Now, what I'm going to look for is a market to pull back to those levels and then post some kind of a bullish reversal that we will get long that trade at that point. I think we could see sort of sideways to higher the rest of this week. There is buybacks every day this week, bonds and notes, I believe every day, of decent size. No auctions of coupons this week. We get the announcement for next week's auctions on Thursday. I think Thursday morning we could see sort of a Wednesday, Thursday, lately Wednesday close has been sort of the intermediate highs. Wednesday close to Thursday morning, I think we're going to put up an intermediate high. Meanwhile, I'm looking to buy this dip tomorrow, rally into Wednesday, get out, see what happens at that point, or at least scale out maybe. If you're thinking longer term, you might even want to start playing around with some kind of a swing long trade here with stops below last night's lows. Looking for that dip now. We want to key on this dip. We want to buy any kind of bullish reversal off of any of these fib retracement levels that I just highlighted. Game plan, set, match. See you later on. Have a great night, guys.